Hello viewers, in this video I'll be going over natural gas, ETF ticker symbol UNG. Today we are down 3.2% and on the 1 hour chart we are not quite touching the oversold level on the RSI. The 1 hour MACD is negative, so there may be a bit further selling to do. And on the 4 hour chart we still have not touched oversold levels. On the 4 hour RSI we saw a divergence on the 4 hour MACD. So selling pressure is still existing. So I do see further selling pressure in coming days. As for the daily chart, we do see a possible support on the, I would say this is the 100-day moving average, and we may even touch that as support. But if we do not use this as support, I do see the next support being around the price of $19.50. Reason why we have a price gap between October 25th and October 28th. So I do see natural gas trying to fill in gaps. So there is a good chance that that may happen. Plus, we do have a very strong selling pressure going down as well. And we saw a divergence in the daily MACD. So there is a bit concern there for resistance. If we do manage to make a nice reversal, the next resistance will be the 9-day moving average, and that is slightly coinciding with the 200-day moving average, and that will act as our next resistance, and that is around the price of $21.30. So if we were to move down lower, that price movement is roughly around 4% to the downside, and to the upside is roughly 4.6% to the upside. So the forecast model is now available in the link below, so you do check it out. If you click natural gas and configure the settings, you get the results displayed on this video. So do enjoy that, examine on your own free time. So yeah, check it out. It's in the link below. So back to the forecast model, I'll go day by day where natural gas will head to in next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. And this trend dates back to March 31st to June 25th, 2014. So let me point out why these two charts are similar. So what we have in the beginning of the current trend, we average above the middle Bollinger Band, and then we proceeded to break down and touch the bottom Bollinger Band. And after touching the bottom Bollinger Band, we made a nice reversal to touch the upper Bollinger Band right here. After touching the upper Bollinger Band, we reverted back to the mean and touched the middle Bollinger Band. That is where we are currently at. And so in the trend in question, we start to see a similar pattern. So in the beginning of the trend, we average above the middle Bollinger Band, touching the upper Bollinger Band several times. And then next we see it touch the bottom Bollinger Band. After touching bottom Bollinger Band, we touch the upper Bollinger Band. And then after that, lastly, we have it revert back to the mean and touch the middle Bollinger Band. So we have those instances right there. And let's just make this blue. And what we have is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. Again, the model that we just examined was March 31st to June 25th, 2014. Back then, natural gas was down around 7.7%. So there's the extreme case that natural gas will head down that far. I don't think we may fall that much. We may possibly just reach around 4% down and fill in the gap that I indicated in the technical analysis. So, but overall, the down pressure is still exists and is a big concern for the bulls. So that is all. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching. And the forecast model is now in the link below, so do check it out.